a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Now we're going to take a look at some ETFs that you might want to keep your eye on during this second quarter earnings season with our ETF strategist, Eric Dutram, who does nothing but sit at his desk and research this kind of stuff.
That's right. That's what I'm here for, Terry.
That's right. All of this interesting stuff. So first of all, what's your take on this Q2 season?
Well, it's going to be a very interesting earnings season. Obviously, leading into it, we had a number of issues, be it interest rates, strong dollar. We also had concerns out of Greece and China that were really plaguing the market, and that was really the kind of the overarching theme going into Q3. So it's going to be really interesting that these issues are mostly out of the way, and now we can focus on these company reports. But investors aren't really looking for that great of an earnings season. Earnings are expected to decline 6.8% year over year. Revenues are supposed to be lower as well. However, most of these troubles are in the oil sector. If you strip out the oil sector, from the S&P 500, we're actually looking at barely positive EPS growth year over year. So, there are some more sector-specific concerns, but it's not expected to be a great earnings season nonetheless.
Don't forget Janet Yellen's congressional testimony taking place as we speak here. We're talking on Wednesday, July the 15th. She gives, this is her second day of two-day testimony on the economy to Congress. Don't know if she's going to steal the thunder away from earnings season. That remains to be seen.
Could be true. It all depends on, if she comes out with the interest rate, talking about more interest rate hikes later this year.
Right.
If that actually happens, it could be trouble. But, there's so many issues going on. You never know what's going to happen 3 months from now.
That's true. Let's get back to this topic here. Start with an ETF in the oil category, right? IEO, it's a fund you've been looking at?
That's right. This fund actually focuses in on the exploration and production market. This can be a more volatile sector of the oil industry. It can be more tied to oil prices. We've seen modest oil price declines here over the past couple weeks, and we got the Iran deal. Some investors might be a little worried about the exploration side of the coin. This ETF focuses on companies like COP, EOX, PSX, but the sector actually has a top 41% industry rank. So the earnings season might not be as bad as we initially thought. And, we might have seen some of the negative price action already priced in. So it might not be as much of a concern. Right now it is a Zacks ETF rank at number 3, and it has lost about 2% so far in 2015. So not a great year, but hey, the S&P 500 isn't doing that great so far in 2015 either.
Okay, well, semiconductors are up next on your list.
That's right. SMH is the symbol I'm looking at here. This is a broad semiconductor fund. We've seen some serious weakness in the semiconductor space as of late. There's been some trouble with Micron. Then again, they did see a buyout offer. So it's been a mixed bag for the semiconductor space. They do suffer from a lot of dollar strength issues as well. Some names to watch here: Intel, just your big name guys. Once again, we get a top 40% industry rank right here. So might not be as bad as some people are thinking. Once again, this is an ETF rank of 3, and it's had a moderate performance as well to start 2015.
Then you say the regional banks might be worth keeping an eye on.
Yeah, and especially with this Janet Yellen testimony that you just brought up, because they benefit from a wider spread in the interest rates.
Sure.
So if the longer-term rates go higher and the shorter-term rates stay low, these regional banks are going to benefit a lot from this trend. IAT is the ETF I'm watching here. UBS and PNC are the biggest fish in this ocean.
In the pond.
Exactly. Yeah. And those two make up about 30% of IAT's holdings, so they're going to be really important to this ETF's near-term outlook. This fund does have a Zacks ETF rank of 2, so it is a buy, and it has been a better performer than most, especially as of late with the rising rates, at least in terms of the 10-year Treasury bill.
All right, and then finally there's the commodity space. What's going on here?
Well, this has been a pretty rough area to be in over the last 6 months or so, and that's mostly due to the strong dollar, or at least how the dollar's been strengthening against other major currencies like the euro and the yen. XME focuses on metals and mining. It's an equal weight product, so you're not going to get too tied down to any one sector or company. It is a little bit concentrated in steel. I think that's about 35–40% of the total, so that's going to be an area to watch for this ETF. Steel, miscellaneous mining, a bunch of other mining segments all have ranks in the bottom 20%. So this earnings season might be one to forget for this area, but expectations are already pretty low. So it might be hard for them to even disappoint these low expectations. The fund is down about 20–25% so far this year, including a double-digit loss in just the past month. So very rough trading. and you think something's got to give here in this space.
Yeah, okay. Well, do you own any of these?
I do not.
All right, check out more ETF commentary and other interesting articles on specific ETFs in the ETF section of our website, Zacks.com. Now, you can get there by going to the home page and navigating using the Funds tab in the top toolbar. And if you're watching these videos on YouTube, don't forget, you can always subscribe to them and comment on them. And some of the comments are interesting, I might add. With Eric, I'm Terry Ruffalo.